stock at the right time.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines this Wednesday morning. Asian stocks edged higher after US markets approached all-time highs. Most global currencies traded flat. In another earnings-heavy day, 4 Nifty companies, that's HPCL, BPCL, Lupin and Cipla, will report their first quarter numbers today. And Elon Musk's tweet of taking Tesla private sent its shares soaring by as much as 13% in trade. Musk values Tesla at $82 billion. And DMK patriarch M. Karunanidhi passed away in Chennai on Tuesday evening owing to age-related ailments. The government will give the leader a state funeral today. And finally, microfinance institution Credit Access Grameen's IPO opens for subscription today. The company intends to raise close to 1,100 crore rupees through its issue. Let's take a check on the international markets, and starting with the US markets. Those stocks closed higher on Tuesday as investors continued to brush aside anxiety over the trade war between the US and China and instead to focus on positive corporate earnings. The Nasdaq rose for a 6th day in a row, its longest winning streak since March. A series of tweets by Tesla chief Elon Musk indicating that he was considering taking the company private swept the market and caused a frenzy late in the session. Abigail Doolittle of Bloomberg News is here, though, to wrap up all the action on Wall Street in this report.
Stocks climbed in Tuesday's Wall Street session. The Dow led the way up about 0.5%, while the S&P 500 and the Nasdaq both up about 0.3%. A multi-day winning streak for all 3 major averages. The Dow up 3 days in a row, the S&P 500 up 4 days in a row, and that tech-heavy Nasdaq having its 6th up day in a row, the longest such winning streak going back to early March. So a bit of a bullish move action here for stocks as investors take stock of what's turned out to be a pretty positive earnings season, plus solid economic data and trade war fears. They seem to have gone away, at least for now. Now, the big stock story on the day, Tesla. Those shares rallied in a big way over the last 4 days, up more than 20%, the best 4 days since 2014. And this as CEO Elon Musk tweeted out that he is considering taking the company private at $420 per share. That financing has been secured. Not a lot of details, but investors seem to like that news. Now, there is a 27% bearish short interest on this stock, so much of the rise, not just out of that earnings report that was better than some had expected, plus on this headline, could be a short squeeze, some of those bears getting out. And it will be interesting, of course, as more details come about this possibility, but certainly on the day, Tesla a big driver for the markets, and now the stock is higher on the year as well over the last 4 days. And Disney, after the bell, reported earnings, a bit of a miss for both the top and the bottom line. The initial reaction was for those shares to fall. More details will come, of course. Snap putting up a beat for its quarterly report, those shares rallying in the post-market. And on the day, 7 of the 11 S&P 500 sectors higher, led by energy, the industrials, consumer discretionary, along with the financials, and Berkshire Hathaway up for yet another day in a row, the best 4-day stretch for Berkshire Hathaway going back to 2017 as investors continue to wonder what the company will do with its $110 billion cash hoard. Will that be returned to shareholders in the form of a buyback? Overall, though, on Tuesday, stocks were modestly higher, bonds lower, so there was a bit of a risk-on tone. In New York, Abigail Doolittle, Bloomberg News.
All right, and late in that session, actually towards the end of the day on Tuesday, the Trump administration unveiled a list of imports from China worth roughly $16 billion that will be hit with 25% tariffs. Now, the move marks the latest escalation of a trade war between the world's 2 largest economies, which will take effect from the 23rd of August. It is the second time that the U.S. has slapped tariffs on Chinese goods, despite persistent warnings by several American businesses against such a move. Tom McKenzie of Bloomberg News has more details in this report.
The ball now is in China's court. They are likely, we should expect them to hit back and detail their own $16 billion worth of tariffs, which was said they will do. So we're getting to the point now where both sides have imposed $50 billion worth of tariffs. Still waiting for the Chinese side, of course. Then you're looking, of course, in Washington. The ball goes back to their side. They're reviewing this $200 billion worth of tariffs that could be imposed early September. China has then said it would respond with its own list of $60 billion worth of goods. You're then looking middle of September, likely you got $250 billion worth of Chinese goods targeted by the US versus $110 billion worth of US goods targeted by the Chinese. And if you're looking at an aggregate of tariffs here in China, you're looking at around 15–16% on 70% of US goods if we get to that point, which is about WTO, pre-WTO standards. No sign of talks yet, of course, and in fact what we're getting a sense from policymakers here and businesses is they're digging in, the Chinese, for a long drawn-out fight.
All right, and just to check on the Asian markets before we head to the trade setup for the day in India, the three early risers had started the day positive in Asia, taking forward that risk-on tone that came in from the US markets and indeed from the European markets as well. So the Nikkei is currently higher as well, about 0.2% higher. But the Chinese markets have opened up, and naturally, considering the developments that came from the US late on Tuesday, they've opened in the red. But it's too early perhaps to say which direction they're heading. The first few ticks were in the red. The Hang Seng has opened with a positive bias as well, in line with most of the other Asian markets. A small word on the yuan as well. There is a word coming in from the PBOC that they want to stop or stabilize the yuan, which has been very volatile in recent sessions. But with that, let's take a check on the Indian market. Darshan Mehta is here to tell you all about what to look forward to today, and also to tell you what's happening in the futures and options space. Darshan, I think earnings is going to be the big word today.
Yeah, there is lots of 4 Nifty companies and lots of mid-caps coming out with numbers. So that's something that will take center stage. Markets are doing well, you know. No doubt the SGX Nifty is indicating a positive outlook. It's up just 5 points. But overall, Asia is doing well. So probably we still have 2 hours. Probably will pick up. But there doesn't seem to be any hint of, you know, any kind of negative news that's coming in on the markets as of now. Now, how did the ADRs pan out in trade? Vedanta was up almost to 1.7%. Globally, their metals have been doing well. So Vedanta is up in trade. HDFC Bank, after a drop yesterday, is moving up in trade. Let's take a look at the counters that didn't do well, and that was Tata Motors, which was down almost 2% in trade. Now, as far as the Nifty was concerned, the Nifty was up, was absolutely flat. Selling was seen on the mid-cap and the small-cap end of the market. The Nifty banks saw selling pressure that came. It was down almost 2%, post weak numbers that came in from, you know, the likes of Syndicate Bank and PNB. The Nifty Bank was flat, led by, you know, some bit of accumulation happening into the private sector banks. The media and metal index did well in trade yesterday. Most of the metal counters were up in trade yesterday. As far as last week's performance, this week's performance is concerned, metals continue to do well, media continues to do well, and the auto companies continue to do well. Eicher has been doing well, so that's the traction that's there. FMCG, real estate and pharma have been down as far as this week is concerned. As far as this month is concerned, metals, media and pharma are doing well, and what is not doing well is in the likes of MNC, auto and real estate companies. Now, in terms of the stocks at 52-week high, the list is very big, but we've just taken a few of them. Counters like AI Engineering continue to do well. Havells is doing well. Bata, Intellect Design, Sanofi, all these counters continue to do well in trade. As far as the fund flows are concerned, FIs were net buyers to the tune of 315 crores. DIs sold in 320 crores in the cash market. Now, individually, if you're looking at the Nifty was absolutely flat. You could see some of the private sector companies like HDFC Bank coming to the rescue. Maruti did well. Tata Steel did well. Reliance, SBI, ICICI Bank taking the Nifty lower with them. As far as the F&O market is concerned, yesterday we saw that fresh buying was seen on the Nifty. Open interest build-up was just 1%. On the Nifty Bank, what we're seeing is that open interest build-up was almost 3%. Now, what is happening as far as the open interest build-up is concerned? There is resistance that's coming in at the 11,500 mark. We're trying to breach that level, but there is resistance. But call writers are active at higher levels from 10,400, and put writers are active from levels of 10,400 to lower. So 10,400 to 10,500 remains the important range that the market market is looking at. What happened in trade yesterday? We saw that put writers again became aggressive at higher levels, and call writers are taking aggressive positions on the 10,500 level, indicating that they don't want the Nifty to close above the 10,500 mark in trade. As far as the stocks in the F&O band is concerned, the Adani twins are in the F&O band. Yesterday you had PNV which entered the F&O band. Jet Airways was already there in the F&O band. So these are the 4 counters in the F&O band. Now in terms of the PCR, the Nifty PCR was flat in trade. The Nifty Bank PCR, let's see how that panned out in trade. So the Nifty Bank PCR was at 1.37. 3 stocks I want to talk about. Torrent Pharma continues to trade at record highs. Fresh buying was seen on high open interest. The second stock I want to speak about is NMDC. Fresh buying was seen, open interest build up of 10%. Results there today. Iron ore prices are doing well, so NMDC should probably have the traction. And Adani Ports saw fresh shorts, open interest build up was 18%, and that too on the short side.
All right, thanks so much for that, Darshan. Now, Credit Access Grameen is a microfinance lender which offers loans to women under the joint liability group model, and it's looking to raise a little more than 1,100 crore rupees from the primary market. The Bengaluru headquartered company's IPO opens for subscription today. Let's go across to Shraddha Babla, who's here to tell you more about the company and also about the issue. Shraddha, first, it's perhaps a little bit of an ask coming after HDFC AMC, but what's the interest like?
That's correct. Alex, we'll know about the interest once today is the first day, so probably by the day's end, we'll know what sort of subscription numbers we have seen. But I'm going to start off with the basic details about the IPO. Well, the issue which opens today, the price band for which has been fixed at 418 to 422. So the total issue is worth about 1,131 crores, out of which 501 crores is an offer for sale by promoters. So this will provide a partial exit to Credit Access NV, and about 630 crores will be raised via fresh issue of equity shares, and that will go towards augmenting the capital base of the company. In fact, the post listed market capitalization, the implied market capitalization would stand at about 650 at the upper price band, and after the issue the promoter shareholding would come down from 98.9% to about 80.3%. so that's as far as the basics are concerned. Let's look at the business profile about the company. Where it specializes in microfinance lending, especially to rural areas, and they lend on a JLG based model largely to women. They're present in about 132 districts in 8 states, and they have an active customer base of 18.5 lakhs. Now in terms of their AUM mix, if you look at the breakup, we will see that a large part of the AUM comes via self-income generation loans itself. Geographic concentration, however, remains high, with Karnataka and Maharashtra, just 2 states, contributing as much as 85% of the AUM mix, which exposes it to relatively larger risks. I was talking about the business loans. Home improvement loans contribute about 10%, so majority of the business still comes from income generating loans for this company.
All right, and Shraddha, microfinance lenders, Bandhan Bank, for example, saw a stellar listing. What can we expect with regard to this company's financials as compared to the other microfinance lenders?
Right. So if we look at the financials, there's clearly no doubt that the company has seen phenomenal growth. So the AUM growth has come in at 57% over a FY 14 to 18 period, and the net profit has grown at a CAGR of about 65% over the same period. In fact, even if you look at some of the other parameters, like the AUM has risen to about 4,975 crores, as comparable to the loan book size of Satin Credit Care. And if you move on and see the gross NPA, however, all of those had remained sub 0.1% till FY 17, but we saw a big spike in FY 18 to 1.97%. So this happened in the year after demonetization, and that probably highlights the increasing risk that comes from the concentrated portfolio. But if you look at how it stands in terms of its peer comparison, the asking price to book valuation for Credit Access at the upper price band at 2.95, Bharat Financial on the other hand, which is a larger player, trades at about 5.1 times. That's on account of its much higher return ratios that it enjoys. On the other hand, Satin Creditcare trades at about 1.7 times. But largely, what do analysts have to say on this IPO? When they're divided, because you have the likes of Antique and MK who have recommended avoid because they still believe that the ROEs for the company are suboptimal, and the valuation already captures that fact, so they don't see significant upside. On the other hand, you have SMC and Prabhudas Lilladher who have a subscribed rating because they believe that the fundamentals of the company are strong, given that it has a niche microfinance player, and they see valuations sort of increasing from the current level, so they have a subscribed rating on this one.
All right, thanks so much for that, Shraddha. Let's head across now to the earnings for the day, and it's going to be a busy day. Both HPCL and BPCL are going to be reporting their numbers today. So let me go across first to Somit Sarkar, who's tracking both companies and who is perhaps going to be the busiest man here at Bloomberg Quint today. Somit, what are we looking at with regard to the numbers?
Well, for both the oil marketing companies, the numbers are expected to be weak. Now, for HPCL, if you see the headline numbers, though the revenue is expected to be higher by close to 17%, the net profit of the company is also expected to decline by close to 17% to 1,400 crore rupees. EBITDA is also expected to decline by close to 12% to 2,585 crore rupees, while the EBITDA margins are expected to contract to close to 3.6%. Now, for BPCL, the revenues are expected to be higher by 16%, but the net profit is expected to decline by around 23% to close to 2,050 crore rupees in the first quarter of financial year 2018. Now, the EBITDA is expected to decline by around 11%, while the margins are expected to contract to 4.4% versus 5.7% reported by the company in the last quarter. Now, this is expected to be a weak quarter for both the oil marketing companies on the back of the weak core performance seen in the first quarter of financial year 2019. However, inventory gains could be the only surprise factor in this quarter. Now, the refining business is expected to be subdued because of a flat crude throughput and a weaker gross refining margin. But as crude averaged around $75 per barrel in the first quarter versus $67 per barrel in the last quarter, that is the fourth quarter of financial year 2018, inventory gains is something that could beat the overall margins and lift the overall gross refining margins for the oil marketing companies. Now, on the marketing side, if you see, the sales volume are expected to be higher for both the oil marketing companies compared to last quarter. However, due to weaker fuel margins, the marketing segment would report a weak numbers, and the gross marketing margin earned by the oil marketing companies on sale of every liter of petrol averaged around 1.5 rupees per liter, that is nearly 53% lower compared to last quarter, while for diesel it averaged around 1.9 rupees per liter, that is a drop around 44%. So this will keep the marketing segment weak for the oil marketing companies. Lastly, key things to watch out for would include the management commentary on the current status of the Vishak refinery expansion project. Now, that is for HPCL, while from BPCL management commentary on the Kochi refinery expansion plan and the stabilization would be a key thing to watch out for. Along with this, management commentary and outlook on the gross refining margins, marketing margins, and any update on capital expenditure plan would be an important thing to watch out for. Well, two other Nifty companies and in fact the two pharma companies that will be coming out with its numbers today, Lupin and Cipla. We have Darshan joining us to give us the details on the same.
Yeah, so let's start with Lupin and how that will probably come out with numbers. Lupin, it will be slightly weak because they have a significant exposure to the US markets. Now, on Lupin side, we're seeing revenue growth of just 6%. We're seeing profits come down by 3% and EBITDA come down by 3%. Now, mainly, a couple of their products are facing, extensive competition, the likes of Metagene and Glumetza. That is something that will dent the US revenues for the company going ahead. Other key drugs are also facing a lot of pricing pressure. So that is something that we're seeing. So on the US side, we're seeing that revenues will drop 15% over last year, and quarter on quarter, it will be down close to 10%. Obviously, there is a lot of seasonality factor which is expected to affect some of the key drugs. Higher selling and marketing expenses for Solosec, which is one of the key drugs, that is something that will dent margins for the company. Domestic business will be good on the back of a lower base. We are seeing anywhere between 15 to 20% growth that will come in, and price cuts in Japan is something that will dent earnings for company. So don't expect a very strong quarter from Lupin, but for Cipla, it could be a decent quarter. We are seeing revenues up almost 14%. Profit will be down almost 16% because of a high base last time around. But what we're seeing is that EBITDA is seen up profit we're seeing down 6%. EBITDA we are seeing down up 19%, and EBITDA margin will be pretty much at the same level what we saw. So there is increasing market share in two of the key drugs, that is Pulmicort as well as Destabin, and that will aid US revenues. The base for the US market is low, and the new product that they have launched will aid them the US growth. So what we are seeing as compared to a degrowth is what we saw in Lupin. We are seeing an 8 to 10% growth in the US business for Cipla, and close to a 3% sequential growth that will come in. India sales will grow about 25%. They have significant amount of business in India, and because of a low base and higher contribution from India, that is something that will do well. And South Africa revenues will grow almost 10% on the back of the South African rand that has appreciated significantly. So overall, Cipla will be slightly in line to better, but expect weak numbers from Lupin.
All right, thanks so much for that, Darshan. And of course, Amit, for those details on the earnings. Clearly, those are the four stocks that you have to watch out for in trade today. But there are several more that are in the news and that will likely be buzzing in trade. And to tell you about them, here's Shraddha Babla, who's back with the stocks in news. Shraddha, what do you have for us?
So, Alex, at the top of the list is Patel Engineering, which is won orders worth 2,400 crores. So that's one stock that I'll be watching out for. As also for IIFL Holdings, and that's on the back of a ET report which says that IIFL Wealth is in talks to buy Chennai-based Wealth Advisors, where the promoters are looking to sell as much as 80% stake. So watch out for that name. We also had a strong set of numbers reported by SRF, where revenues grew by 35%, net profit growth came in at 29%, but operationally it was a very strong quarter, with EBITDA margins expanding by nearly 350 basis points to 18.8%. Similar is the case with Glaxo Consumer, which saw a revenue growth of 12%, but the net profit growth came in at a very sharp 52%. EBITDA margins also expanded by nearly 400 basis points to 20.8%. Inox Wind also seems like a beat as far as the estimates are concerned. Revenues were up by 4.6 times, whereas the net profit came in at 10.4 crores as compared to a loss of 39 crores in the previous quarter. At the operational level also, the company moved to reporting an operating level profit versus a loss earlier. Edelweiss Financial is next on the list. While it reported a revenue growth of 19%, the net profit growth came in at 31%. Emphasis reported more or less inline sort of numbers with a revenue growth of 4%. Net profit growth, however, came in at a higher 8.7%, and EBIT shot up by 3.3%. Remember, the board has also announced a buyback of about 3.79% of the equity, for which the price has been fixed at 1,350. So that probably will have a bearing on the way the stock reacts. And finally, weak set of numbers being reported by Thomas Cook, where revenues have fallen by about 7%. The net profit, however, has grown by about 6%, but operationally it was a very weak quarter, with EBITDA falling by as much as 50% and the margins coming in at just 4%. So these are some of the names which are likely to see reaction in trade today, Alex.
All right, thanks so much for that, Shraddha. Just want to take a quick check again on the Asian markets before we move forward. I told you earlier that there was relative strength in the Asian markets following that strong session in the US. The US markets, of course, near all-time highs. But there's a pocket of weakness, and that's understandable, and that's the Chinese benchmarks that are lower in trade, but they're also off their lows in the early few minutes of trade. So the Shanghai and the China A50, both the benchmarks trading about just a little more than 0.1% lower in the first half an hour or so of trade. But the big update from yesterday, DMK President M. Karunanidhi's political journey, which began more than 80 years ago, has been monumental in shaping the state of Tamil Nadu to how it is now. The five-time Chief Minister is long considered to be the last of the three mass leaders in the Dravidian movement. Here's a glimpse of his life in numbers. Well, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories on the website, bloombergquint.com, that you'll find if you log on right now. First up, the Union government has appointed S. Gurumurthy as part-time non-official director on the Central Board of the Reserve Bank of India. Satish Kashinath Marathe has also been appointed as a part-time non-official director on the board of the Central Bank. The Civil Aviation Ministry is in discussions with the Finance Ministry for an 11,000 crore rupee bailout package for the ailing Air India, sources have told PTI. The discussions come against the backdrop of a failed effort to privatize the loss-making national carrier, which continues to grapple with financial problems. The government doubled import duty on as many as 328 textile products to 20% to boost local manufacturing in a second such increase in 2 months, according to a notification tabled by Minister of State for Finance Pon Radhakrishnan in the Lok Sabha. That's all we have for you on this edition of Daybreak, but there's a lot more, like I said, on the other side of this very short break on All You Need to Know. So do stay tuned. This is Bloomberg Quint.